This is IAQ Radio, Indoor Air Quality Radio, the voice of the indoor air quality industry, with your hosts, Radio Joe Hughes and the Z-Man, Cliff Zlotnick. And now, Radio Joe Hughes.
Good day and welcome to IAQ Radio Plus. It's episode 734, and this week we welcome Mark Whatley, better known as Whatley, to talk about his life and times and his mission to foster a collaborative environment between restoration contractors and insurance carriers. Before we get started, let's thank our sponsors. They're the reason we can continue doing the show. And don't forget, after the show, you can continue the discussion on afterthoughts.radio.com. IAQ Radio Association sponsors are AIHA, the American Industrial Hygiene Association, at AIHA.org. IICRC, the Institute for Inspection, Cleaning, and Restoration Certification, at IICRC.org. The Restoration Industry Association, RIA, at restorationindustry.org. The Environmental Information Association, EIA, at EIA-USA.org. Actionable Insights at getinsights.org. IAQ Radio industry sponsors are Particles Plus at particlesplus.com. BioPlanet at byoplanet.com.
And now you can win a cool prize. It's time for the IAQ Radio Trivia question. Be the first to correctly answer. Simply email your answer to czlotnick at cs.com. Or if listening live, just text your answer from your computer. And now, here's the Z-Man.
Hello, everyone. I'm sorry to report that no one identified the Odd Fellows and the American Legion as the two organizations that both experienced outbreaks of Legionnaire's disease while meeting in the same place, the Bellevue Stratford Hotel in Philadelphia. Here's today's IAQ Radio Trivia question. What does it mean to go mononymously? What does it mean to go mononymously? Back to you, Joe.
All right. Mark Whatley is an influential voice in the property restoration and insurance technology sectors. He co-founded Sureti and is also the founder and board president for Actionable Insights, a nonprofit organization dedicated to enhancing the property restoration industry by clarifying billing standards and training on modern claims settlement tools. Actionable focuses on fostering a collaborative environment between restoration contractors and insurance carriers, ensuring industry-wide best practices are maintained. Welcome, Whatley. Great to see you.
Great to be here, Joe. Thanks for the warm welcome.
We want to get our audience to know a little more about you. I know you came from San Diego and you're still out in the Southern California area, but tell our audience a little bit more about your work history, if you would.
I was a man who didn't grow up with a lot of wealth. And if you're a hustler and you're not particularly wealthy, where do you end up in high school and before? In construction often. And so I was swinging a hammer, from maybe age 11 on, working somewhat illegally for contractors in the San Diego space. And for whatever reason, Joe, a lot of that work gravitated towards ADA work because American Disabilities Act was a big deal when I was younger. And so I've spent a lot of my time in high school and in college working for two large general contractors. And we were putting in ramp systems at bungalows, at a lot of schools here, and then expanding doors to make them 36 inches wide so you could get a wheelchair through and so on. And that was my experience in the trades. So that's while everybody was like working at TGI Fridays, let's say in college, I was out there doing rise and run calculations on ramps, and that experience was useful when it came to restoration. Because if you think about what ADA is, you're taking like an existing structure, right, and you're augmenting it, and it's akin to restoration because it's not a clean build, and that prepared me for some success post my private equity run. So out of college, I got a signing bonus to go to a private equity firm, and I did that, and that was a great experience in some sense, but that firm closed had a few bucks in my pocket, and I was like, okay, I want something that's going to be buoyant in a down economy because I just lived through being in the financial services space in 2008 financial crisis. So like, okay,
Okay.
all right, I got a few bucks in my pocket and I know how to build. What should I do? And I rather pragmatically selected for the property insurance ecosystem, and just kind of wedded those skills that I had developed and fostered over the previous decade. I knew how to build stuff from the outset. And
Where did you
just
go to school?
Cal State San Marcos for my undergrad, and then that PE firm I mentioned, they sent me to UCSD for my postgraduate work.
Interesting. Cliff, let me turn it over to you.
Thanks. You've acknowledged the value of hands-on learning. What skills have you learned besides construction? Hands-on.
Like hands-on, like as it relates to trades, the trades I'd feel comfortable with, like drywall. I've done a lot of drywall. I've done a lot of electrical work. I worked for a flooring contractor for a year, in my freshman year of college. So familiar with, wood flooring install, solid wood flooring, engineered wood flooring installation. Those trades I'm comfortable with. I think that I'm losing it though. They say if you don't use it, you lose it. What was that 40-year-old version? Like
Right.
every time I got a project around the house, Cliff, I ain't as good as I once was, but I'm as good as I ever was. Like it is shaky. So anyhow, I don't think that my skills I think my skills have atrophied a bit as it relates to the trades, but those were my trades like I felt most comfortable with. And I guess it's easy to overlook, but I did own a painting company in high school.
Okay.
And so, I mean, painting in some sense is rather intuitive, but we were pretty good at it, and actually ran a real business that was doing like $250,000 a year top line revenue in high school. I had a crew of 3 and I was doing something. It was fun.
So you've always been an entrepreneur, huh?
Yeah, this goes back to like third grade. I remember third grade, I would buy calendars of sports cars, right? And you get like 12 of them, and then I would cut the binding off the top and I would sell it to my friends for like $1 a piece, and I would buy the whole calendar for $3. But I found that arbitrage of like selling them individually, right? I could end up getting $12 out of the deal. So my cost of goods sold were like 25%. I was like, this is amazing. So, yeah, that
I hear
started
you.
in third grade, and that led to, me burning CDs and so on, like just those, what you would expect as an entrepreneur from the jump. I always was looking for arbitrage.
Interesting.
Well, it seems that some of those other things you learned hands-on as well. Like how to burn a CD, or how do you, cut a calendar and market it, and so on
You're
and so
queuing
forth.
in on something I think that makes me a weapon as it relates to software, and then connecting the dots to the trades, because I grew up in an analog world, being born in 1984. And then I've seen that transition and really been a part of it each step of the way. Like I was a nerd, I still am. I used to build my own computers, my 486s, my Pentium 2s. Like I built them up, started a program in high school where we would get old surplus computers, and then from like big institutions, and then we'd piece them together and make other computers. And we actually were the engine that provided computers to the rest of the school. That was fun. But I just was born at the perfect time where everything was analog, right? And then I've been able to ride that wave, and I continue to put pressure on myself to stay on the bleeding edge of technology because I've just been riding that wave my whole life.
Did you come from a big family? Do you have siblings?
I am an only child.
Okay.
Can you tell already, Cliff?
Well, you don't seem spoiled to me. But
Thanks.
yeah.
I don't know that I would be regarded as spoiled, probably out of the block, but I work a lot on myself every day. I wake up, I realize I'm flawed, and try to be the best version of myself. So small incremental improvements. And I think that's very important if you're going to lead a large collection of folks, right? You can't show up in a selfish way. You've got to be willing to take all the responsibility when things go bad, and you've got to be able to give away all of the responsibility when things go great. And those are skills that I think you develop if you're going to be in a leadership role and perform at high levels.
And who helped you come up with those? Did you take a course, or did you read a book, or did you hear a speaker that kind of talked about that, or did you originate those ideas?
Well, I think that it's in the outset of my career, even going back to the trades, right? Think back in college, I was leading a crew of four. I'm 20 years old and I'm leading around a bunch of 35-year-old men. And not a bunch, right? But a crew of three, so on. Um, I always had to show up in a kind of way that communicated that I had a good handle on the situation and I could guide us towards a good outcome. So I've been developing those skills from the outset, but I was hugely flawed. I think like out of the box as a person, Cliff, I'm insufferable. And so I I struggled and I failed, right? And there's bodies in my wake, especially early in my career. And then I had to work on that. And so now as I'm in my 40s, I think I've just learned from what didn't work and applied that. But that's not to say that I haven't wedded my failures with a lot of audiobooks along the way. I crush me some Blinkist and Audible. So I'm always consuming, some, for lack of a better word, self-help book. And I keep thinking that maybe enough is enough on that front. And I've tried to push into like fiction and other things, but it's not really what I enjoy. I enjoy thinking about how to be the most effective leader and innovator I can be. And that's what I read and listen towards.
Well, how did you become interested in the property restoration side of things? And then how did you get your hands-on experience in that end of the world?
Being in private equity, you tend to look at things from 40,000 feet. And I had worked my way up to deputy and chairman and CEO of a company that had $20 billion under management, 330 employees. And so I looked at property insurance, Joe, is something that it was going to be there and it was going to be consistent. And the demand for those services were going to be unwavering. And it looked like there was just going to be pops on the upside by way of outsized catastrophe events. So I just thought this seems like something that's not going away. And I was sensitive to the boom and bust of new construction. So I was familiar with how, you can really have 5 great years as a builder or developer, but then you can go through 4 years of retraction. And there's a lot of pain when you grow a company to a certain staffing level and then you have to downsize. Like as a founder, that's really painful. And so I aspired to build a brand and business where you could just continue to ratchet up and scale and maybe wouldn't have those outsized retractions that can be heartbreaking.
It seems like the restoration industry also is less likely to be replaced by robots and AI and so on. Was that part of your thinking also?
I can't give myself that much credit. I wasn't reaching that far into
Okay.
the future, but I do want to champion your point and that we will see Optimus, the Tesla robot, start to enter the fray in the next decade. But that will be for new construction. It's much easier problem to solve when you're deploying robots or 3D printing technology in a new construction environment. In a restoration environment, it's going to be difficult to apply those technologies and it'll trail for another decade. So I don't think we're going to see like automation relative to actual mitigation or repair activities for another 20 years. But we'll see it in new construction in 10.
Okay. Cliff?
Yeah, you've been successful in, I guess, recognizing the role that technology could play in insurance repair and helping to reshape this ecosystem. Which term most accurately defines you, or terms? Would you look at yourself and call yourself an early adopter, or would you call yourself a visionary, or maybe even a futurist?
Probably the
Or
latter. It
all?
sounds pretentious, Cliff, but I can reach into the future with ease. And then I
Okay.
sit around with people and then I go, how come you can't see how geospatial technology is how we're going to underwrite and settle claims moving forward? just makes sense. From the moment I saw Matterport technology in 2015 and being the first firm to use geospatial technology, it just, within the first 5 minutes of looking at my first scan, Cliff, I connected the dots that I'm still working to, integrate into the industry a decade later. But it came to me very quickly. The same thing that has happened with expert systems and the rule-based engine that Actionable Insights has developed. Same thing that's happening with learning large language models and AI stuff that Actionable, again, is working on, next generation stuff that hasn't hit the market yet. It just comes easy to reach into the future. The hardship is the idea is easy, Cliff, but there's a tremendous amount of craftsmanship in between that, having that idea and then getting a product to market that is lovable. I don't like this minimum viable product idea. I like the idea of minimum lovable product. And there's just a tremendous amount of craftsmanship in between having that idea, working within the constraints of the technology or your user base, making those adjustments, and then bringing something to market that can be loved.
I'm curious. Go ahead, Cliff. I know this. You worked hard on this one.
No. Go ahead.
Tell me a little bit about some of the companies that you have developed. I guess there's Actionable Insights. Sureti is one. First, tell me a little bit about Sureti. What does Sureti do, and how does it help the people that use it?
Before we go to 10,000 feet and go to an individual brand, just to help round out my approach to why I've got these various businesses, you'd want to understand that I too once was a prime general contractor within the property insurance ecosystem. And what I did is I remembered all of the headaches and heartaches I had as a general contractor. And I think it's much easier to solve a problem if you've actually had the problem. And so everything I've ever built is an expression of me trying to solve a problem for myself as a prime contractor, and by extension, the industry. And so because of that, all of the brands, and we won't have time to get into them all today, Joe, they are all accretive. They work with one another, and it serves the same client base, and it's of the same spirit of I've had this problem, you're probably having this problem, and this is my best attempt to solve it. And so Surety was an outcome of me training with Actionable. There was a 5-year period where Seth Harrison and I, Cole Marting, Elliot Lipson, we were on the road for 5 years in a row, 75% of our time. We just lived on the road doing private training. And I would go around and I even told folks, and people didn't know how to take it, Joe, but I would sometimes address a large collection, a couple hundred people, and go, I'm not going to be doing this for long. I'm doing this to, gather information about what problems need to be solved and in what order. And so I'd ask some questions when I would start speaking to the audience. And one of the things I used to ask is if you could change one thing about how ABC restoration contractor writes and settles claims, what would it be? And 25% of the time, folks would complain about how mortgage companies were holding on to the claims proceeds, and that was precluding them from making their full bonus. Because if you work at a larger restoration shop, your bonus is dependent not only on your margin, your gross profit, but it's also dependent on how quickly you get the company paid. And so you may have great margin, but if it takes 110, 120 days to get paid, you might only see 30% of your total bonus, right? And that's heartbreaking to an estimator or project manager, because they did great work for what they can control. But all of a sudden there's this weird mechanism where there's this third party who's really not a materially interested party is holding the money and, encumbering your ability to get paid. And I remember it as a restorer, having to deal with mortgage companies. I remember getting a blue medallion stamp and notary signatures and just mountains of paperwork that didn't make sense, and calling them, and you're like, you're not the borrower. The borrower is 93 years old. I'm doing the best I can. Can you move this money? Right. And they were impossible. So I knew that I had that problem, and I confirmed it by way of Actionable. I was like, damn it, somebody has to solve this problem. And I'm foolishly optimistic to think that I could change how $200 billion a year flows within the property insurance ecosystem. And now in my 40s, I don't know if I'm as foolishly optimistic. It's been crazy. I think I could pull this off. But we have started a conversation I'm very proud of, in that carriers now at the highest levels understand that including mortgage lenders on paper claim checks creates bad outcomes. And bad outcomes, not just for policyholders, but for them as carriers, because it's really driving up the cost of loss of use. So you have additional living expense on residential, you got business interruption for commercial. And those are significant dollars, Joe, for the carrier. Paint with broad strokes, 30% of your total indemnity, you got a $100,000 claim, $30,000 is going just to loss of use, room and board. And so it's our position at Surety that restoration contractors are building slowly because they're getting paid slowly. And if we can pay them out ahead of doing work, and we can circumnavigate the lender and the policyholder, collect the deductible for them, and relieve them of that angst of like, if I deploy outside labor and materials to this job, I may not get paid. Because we all feel that as restorers, right? You never want to get too far ahead of the money. But if there's an unbiased third party that's trusted, that has the money and wants to release it and is releasing it out ahead of doing the money, then you can move forward at speed. And what we've proven after distributing tens of millions of dollars in claims proceeds since 2020, we have proven that restoration contractors can build faster if you pay them faster.
I'm curious, why do they hold on to that money so long? Is it just a simple matter of, hey, we're going to collect more interest, we're going to lose, we're going to make a little bit more money, or are there really legitimate reasons that we're not aware of for them holding that money so long?
When I started out with Surety, I thought that it was driven from nefarious behavior. Like mortgage lenders wanted to withhold that money because it was an investable asset to them and they were earning interest. That's what most restorers think. It is not true. The reality of it is those economics, especially at the larger banking institutions, are regarded as a liability on the balance sheet, and it's a non-investable asset. Why? Because there's a lot of legal precedent on the books that where policyholders or aka borrowers have taken their mortgage lenders to task. And in every case known to me, if the lender had invested those assets, that came out in discovery. And then it was easy for the judge to say, you were nefariously holding onto these proceeds because you were profiting from it, right? And so as an outcome, mortgage lenders have gotten away from investing those assets. They regard them as a liability. And so we actually have the third largest lender on our board at Surety at the C level, PNC Bank. So it's JP Morgan Chase, it's Wells Fargo, and then PNC. PNC has been guiding us since 2020. And they helped us understand, Joe, that they're paying out tens of millions of dollars to service these lost draft checks every year, because it requires a lot of human capital on their side to take all those calls and just all that paperwork and distribute those claims proceeds. Bad for the lender, and it's non-investable for them. All the lender's trying to do is make sure that that property is restored to roughly pre-loss condition. Because if they foreclose on that property and those economics weren't deployed to restoring the property, then they're left holding the bag. Then they have to go figure out, was there a claim, reach out to that relative insurance company, and then they will file a complaint against the carrier, and then the carrier will have to pay twice. This does happen all the time. More carriers try to omit a lender, and then those individuals who would run off with the money and not restore their property are the same individuals who would foreclose on a property. Okay. And then the carrier has to pay twice. So at Surety, we're underwriting the risk of double indemnity for the carrier. We provide space for the carrier to omit the lender without going at risk.
I actually have a comment from a listener, actually. And I think his comment is that part of this is a function of the ineptitude of lost draft outsourcing call centers.
Yeah.
And he went further to say that there's also a refusal to communicate with emails only by fax.
Only by fax. That's right. Because they're not really incentivized to do anything better, Cliff. Here's how the mortgage industry works. You've got three types of mortgage companies. You've got originators, which are essentially your sales folks that sell in to borrowers. Then you've got your holders, who holds that debt. If any of us have had a mortgage on this call, you recognize that who you actually bind with and sign with, they sell your mortgage within 6 weeks, right? We've seen it happen over and over again. So the originators sell it to the holders. And then there's a third component. The mortgage ecosystem is the mortgage servicer. And so Sinlar, for example, has about a third of the market. And so that's who you run into a lot if you're a restorer. And the inconsistencies, even at that company, Sinlar, you think they would be good at it. They are not good at it. They don't know the difference between contents, mold, mitigation, environmental repair. How do you prove that the property was dried out like the pre-loss condition? These are the kind of nonsense that you end up running against. And I should unpack a little bit more about how we got here. 1978 Fair Housing Act guides a lot of the behavior from the mortgage lender side and the mortgage servicers, but it's not actually the lender and it's not actually the servicer. It's actually Fannie and Freddie. So 85% of the mortgage companies within the United States are underwritten by implicitly, not explicitly, but implicitly backed institutions called Fannie and Freddie. And Fannie and Freddie in 1978 had the Fair Housing Act, and that Fair Housing Act had some pork barrel nonsense in it, which included this notion that all claims proceeds are owed to the primary lien holder. This is before we ever bifurcated mitigation from repair, guys. This is like 1970s. You just had a manila folder, maybe a Polaroid, a paper clip, and you get 3 bids from a contractor. And that was the adjuster's worksheet. And the adjuster would pay off maybe the middle bid. It's a lot of how it was done, Cliff, back then. And so they created a 30-point checklist from Fannie and Freddie. So the mortgage servicer is trying to get through a damn checklist that they didn't create, can influence to satisfy Fannie and Freddie for something that was done 50 years ago that doesn't make sense. So they're asking for things like, hey, give me your adjuster's worksheet. Do us in restoration, do we know what the hell an adjuster's worksheet is? It doesn't even make sense anymore. Really what they're saying is give me your Xactimate, right? Give me your Xactimate invoice. But that isn't translating because Xactimate didn't exist until 1993 in a credible way when they won the State Farm account. So it's just where you've got an industry where they're speaking different languages. Cliff, that's the problem. Like mortgage lender servicers do not speak the language of restoration, and they aren't particularly interested to solve it. And so, Cliff, when we started out with Sureti, I thought we would throw in with the lenders and like be essentially an extension of the mortgage servicers, and we still could. There's probably a business there, but I'm not passionate about it. I'm passionate about from first principles, just being like, okay, I know lenders what you really want, which is you want this property restored to pre-loss condition. I know how to do that, but giving you the money is not going to help. So just let us distribute the claims proceeds, and then we release our proceeds in a tranched manner, a third, a third, a third. So the first 36 hours as a restorer, ACH into your account, you get a third of the money. I'm giving you money before you do the work. You get your material draw, so on. And then at 50% completion, when substantiated by geospatial data, a Matterport scan will release another 33%. So that gets you 66%. What I know about 66% as a restorer is that's enough for you to do the damn job. That last 33% is, your general overhead, your fixed cost, right? Your profit, so on. But 66% can get the damn job done. And that last third is what we really pay attention to, is we want to make sure that job is done and completed to pre-loss condition, policyholder satisfied. We have a post-repair scan, and that's when we release the last third. Did I answer your question?
It certainly answered mine, Cliff.
Okay.
Let me make sure it answered yours.
Yeah. I didn't have the question. I think, one of the things that, I thought was interesting and kind of getting ready for the show is that, kind of how this got started and how this benefits the restorer. I think that that's really important. And also how much or how little it actually costs. And there are different types of costs. There's an outlay, and then there's inherent costs that I think people just don't even think about. So if you could talk about that.
Yeah, well, let's start with the fee structure. It's dead set, simple, straightforward. Doesn't matter the size of the job.
Right.
It's 2.5%, akin to a really low credit card
Right.
fee. As the money flows, we withhold 2.5%. Our staff only gets paid when our restorers get paid. And so you have a very different dynamic here at Sureti. Is every 7 days, your claims concierge is going to be reaching out to you and saying, hey, Joe, where are you at with that project? You're 50% done. We want to pay you. And so our team is incentivized to pay because they make a small commission when that money flows. So you have a collection of people trying to get the money out, as opposed to waiting for somebody to ask. It's a totally different dynamic. And we think that that's a winning formula. And restorers, it's kind of like full self-driving. You know, what Tesla achieved with their 12.3 version of FSD in March, when they eliminated the 5,000 lines of explicit C++ code and they moved to full neural nets, it really smoothed things out. And it's so elegant now that it lowers your anxiety when you turned it on. But I've been using FSD since day one. And when I used to use it, guys, it was pretty shady and it would do weird shit and your anxiety would actually go up. And so I used it because I'm a nerd and I wanted to see the technology evolve. But they've reached only recently this panacea of like when you activate it, your anxiety goes down. So how do you apply that to surety? Anytime you're a restorer and you're engaging in a property and you're deploying materials, equipment, labor, your anxiety ratchets up as you get out ahead of the money. Okay. What I think we have accomplished with surety, as long as you know surety has the money and we're escrowing those proceeds, then you can just build as fast as you can and you know that money's going to flow. And that money's going to flow even ahead of you doing work. So your anxiety, comes down. Is it worth it to circumnavigate a lender for 2.5 points? Yeah, we've proven that. Here's something we don't talk about that often. I know my audience here, I think I can speak directly to our market. Is it worth it to circumnavigate the policyholder? How often do we have a policyholder doing nefarious things with our claims proceeds, giving us the runaround? Just had to happen this morning. I own a private client-centric pack-out company, got coverage all throughout California. Just this morning, something hit my desk. Never seen this happen before. But because, you want to get paid quickly and secure payment, sometimes we will use Intuit technology, which you guys know to be QuickBooks for invoicing. And we had a quick voice invoice. We had a pack back. And so typically we like getting paid before we do the pack back. So we got paid through Intuit and we did the pack back 2 days ago. And then just yesterday, Intuit came in and clawed those money back out of our damn account. Yeah, pulled it back and returned it to the policyholder. And now I've done the pack back, and now the policyholder is acknowledging that they have a gambling problem, and we're on the wrong side of it. What will land with this audience, Cliff, Joe, is that policyholders are often the most nefarious player in this space. It's not the staff adjuster. It's not even the lender. Certainly not the restorer. Policyholders do some weird stuff when they have 180 grand in their checking account and they've never had more than $2,500 in their checking account. They behave strangely, and I'm sick of restorers being on the wrong side of it. And somebody's got to step in and show the world that that's a lot of the reason carriers complain about the cost structure. Oh, that seems too much. This bill seems too much. But you don't understand the amount of administration and risk that we're going up against. It's not about slinging the drywall. Okay. For every person in the field now as a restorer, if you have 10 people in the field, you need 3 administrators just to figure out how to bill, invoice, and track and negotiate with carriers. That's ridiculous. When I started in this business, it was 1 to 10. Now it's 3 to 10. Even with all this technology, Joe, it's not getting more efficient. It's getting worse because the carriers keep burdening us with more and more. You got to prove everything, right? And they think that they're constraining claim costs, but my position is they're actually adding cost because those administrative heads are expensive. 3 administrative folks are going to cost you what 7 field folks are going to cost. So you've essentially increased the cost for the restorer by 25%. So you wonder why the price is what it is. Like there's just a lot of nonsense that we're up against. And I want to constrain that. That's how I want to dent the property insurance ecosystem. I think I can.
And that's surety. Now let's talk a little bit about how you got started with Actionable Insights.
Yeah, 2011. I'm trying to figure out this thing called Xactimate, and I was bewildered. This is actually a really romantic time. I think I was on the tail end of like this really collaborative time when you would have staff adjusters and they were local and they would help develop restoration contractors, and there would be a relationship and trust. And so I showed up in a supremely humble way. I almost had to manufacture it, Joe, where I would go out with staff adjusters and be like, hey, teach me how to estimate these lower cabinets, on this loss, or I remember really struggling with a high grade shower surround. Like, what are the line items that would be warranted? Because you've got all these cross category inclusions between like plumbing and glass work, and then the tile itself, and how all those line items work together. That was a mystery to me. And so I realized that that mystery, like, this is pre YouTube, guys. This is like, you can't just Google it. Like, how do I estimate lower cabinets, so on. So I said, oh, how can I create some clarity? Because I want to create these invoices. I was doing a lot of preferred work for farmers. There was no TPA, no BS. It was just staff adjusters who trusted my shop. They sent me work. I did my best to submit an honest invoice, and it was paid without a lot of argument. That's what I mean. I was on the tail end of like a really special time of restoration. That culminated through going, okay, can we develop some standard? And I was just thinking in terms of San Diego, for what are the line items that would be warranted when you have a high grade shower surround. So I invited farmers out, AAA, Travelers, Wawa Nisa, and all the influential restorers that I knew. And I'd had this group of, say, like 80 people in the room. So once a month, we would get together, and then we would have a slide deck that was put together by my team. And it would outline, hey, do all these line items seem reasonable and customary, right, relative to this task? And we had those conversations, and those meetings went well, and they grew, and we opened up various chapters throughout California and beyond. And we recognized, like, well, this isn't the most scalable way to get this information out there. So we took all those slide decks, and then we compiled it into a 3,300 page book, the umpire's mitigation manual and the umpire's repair manual. And Seth Harrison and I are the principal authors of that. And each chapter was approved by our board, both sides of the claim. One thing, Joe, that's weird and weird some restorers out is, like, our leadership is made up of claims professionals as well. Currently, our board actually bends towards the carrier. And I think that's a very unconventional approach, but we believe that you couldn't develop a standard that was just prescribed by the restorer. And we thought that the carrier had to be part of that conversation. And so Actionable tends to really come down the middle on things, but we will take positions that Verisk, the principal author of Xactimate and so on, owner of it, they're unwilling and uninterested to take positions on hairy things. Actionable will, in fact, take a position, but our position is traditionally down the middle, observing the interest of both sides of the claim.
I've got to follow up, but first we've got to stop and thank our sponsors for halftime. Association sponsors are AIHA, Healthy Workplaces, A Healthier World, AIHA.org. The Environmental Information Association, EIA's multidisciplinary membership collects, generates, and disseminates information concerning environmental and occupational health hazards in the built environment at EIA-USA.org. The IICRC, a nonprofit standards development and certifying body for the cleaning and restoration industry, IICRC.org. The Restoration Industry Association, the oldest and largest nonprofit professional trade association dedicated to providing leadership and promoting best practices through advocacy, standards, and professional qualifications for the restoration industry at restorationindustry.org. Actionable Insights. No more mistakes. No more missed line items in your Xactimate estimates at getinsights.org. Industry sponsors are Particles Plus. Feature-rich particle counters and air quality instrumentation. Count on us. ParticlesPlus.com. BioPlanet at byoplanet.com. Improving human, animal, and environmental health with electrostatic spray technology and advanced chemistries at byoplanet.com. All right, we're back with Whatley for the second half of the interview. I got a follow-up. You said that, Actionable kind of takes the down the middle approach. I'm wondering if that has been something that restorers have kind of rebelled against. I see a lot of restoration guys, and it seems like it's like a mentality of, it's us against them. You're trying to bring them together. Has that caused issues for you with restorers?
At times, but I feel like if you do the right things for the right reasons for long enough, that people tend to come around to trusting you. But I can remember some movements, like the Restoration Rebels led by Andy McCabe. Some
Yep.
of them really resisted this notion of Actionable would have a board that had carrier influence, and they thought that we may have been selling out. But now the evidence is clear that we're creating better outcomes for restorers, and we believe that those better outcomes are also translating for better outcomes for the carrier, right? Look at how Surety's built. Everything that I've ever built, Joe, it observes those interests of both sides of the claim. I just thought it was very short-sighted to just serve and preserve the interest of one side of the claim. Albeit, I think it's harder to take this approach. And there's times I've regretted it. It's definitely been a lot more eating glass and staring into the abyss as a founder. If I took shortcuts, it would have been easier. But I think this is going to allow us to have brands that have staying power and will exist beyond me. Actionable's, chairman role will become electable when the company matures to that level, and it will live on beyond me, and I'll feel really good about that. Akin to Marty King and RIA, like I think that Actionable should exist for next 100 years and beyond, and it's not going to be me at the helm, right? So there has to be a plan for that. But that's why the 501c6 nonprofit status really reconciles with something. If you want to build a legacy and something that live on, that's the way it's got to be done. But if we had just served to restore, if we just created artificial intelligence tools that drove up claim cost and didn't think about the interest of the carrier, I don't think we would have been as successful in the long term. But I think if we had just served the interest of the a contractor, I think many of my brands would actually be doing more right now. We would just be going at risk to not exist 15 years from now or not be as influential.
Interesting. Cliff, let me turn it over to you. We'll get another one in before we go to the roundup. I want to bring in the restoration industry's global watchdog, Pete Consigli. Go ahead, Cliff.
Well, you're talking about being able to see in the future, and what other restoration industry problems are you trying to solve or thinking about solving or planning?
The thing I'm really passionate about, remember I wrote that book, nobody read it because who the hell wants to read a 3,300 page book, okay? That turned into a searchable insight sheet database that we sold for $7 a month on subscription at getinsights.org. And so then you recognize, well, people don't necessarily want to query outside of Xactimate for the answers to these questions. And so Actionable set up a strategic partnership with Verisk back in 2019, and we've taken all of those rules, that knowledge, that approach to claim settlement, and we've infused it into the Actionable profile. And so now Xactimate guides you as you work in real time, and so that has several good outcomes. It constrains overages, things that would jam you up in claim settlement. You can't include line items anymore that are overtly overages, right? There's some line items that are out of the 17,500 structural line items, Actionable has made the connection between all of them. And we say, hey, this one is accretive. If you have this one, you need that one, right? But if you have this one, you can include that one, right? And so our rules, that's maybe 2,000 overage rules, 2,000 omissions, that's expressed through an expert system that guides behavior and trains restorers, staff adjusters, IAs towards better claim outcomes. So proud of that. That's very much got my attention. I'm alluding to something I've never said on a podcast before, Cliff, is that Actionable's working on a artificial intelligence component that will leverage Gen AI. So we've built an artificial intelligence solution that's an expert system. So these are rules that provide a very specific outcome, but we're also working now on generative AI. And that generative AI, when you're working in terms of neural nets, it can hallucinate sometimes, guys, meaning it throws, like LLMs have a weird characteristic, large language models, where if it doesn't know an answer, it just gives you an answer anyways, even if it's wrong. And you can try to constrain that with RAGs and so on, but I think that the best outcome will be in a expert system alongside generative AI, and that's where we can really reach into the future. I'm very passionate about that. And now that Surety is gaining traction, we're winning an insurance carrier every 6 weeks, our CRO Longano is bringing us master service agreements every 6 weeks, and we're onboarding carriers. We're sending more and more claims proceeds every week. That feels great. I mean, how rewarding must it feel to see that money flow according to first principles, getting that hands in the hands of the restorers, and the restorer being puzzled why we're not charging more. Like that's a really fun place to be. And that's
Yeah.
just happening now. And it's been really hard building surety. But finally, guys, we have these carriers recognizing, like, holy crap, we have to deal with this mortgage company problem. It was really hard, Cliff, to build surety because carriers didn't know they had a problem. So for 2.5 years, we just had to educate the market of like, hey, this creates a bad outcome. This is how bad it is. If you cut a paper claim check and it's got multi-party on it, that's a nightmare and it's driving up your claims cost. But they didn't really get it, Joe. They thought, oh, I cut the check, I'm done. I'm like, no, that claim's still open. You're on the hook for it. And so I'm really bullish on surety and actionable. I think those are what take up a lot of my headspace right now. And I enjoy innovating around those two brands in particular.
Cliff,
Yeah,
do you wanna go ahead, Cliff.
Now, one other thing, okay. It seems to me that, number one, you can look in the future and you think about it. How long does it take you to get your team to kind of see what you see? Because you're the only one that's seeing it. And oftentimes it's hard to describe what you're seeing to someone else. But if you're both looking at the same thing, you can see it. So I'm just wondering how you overcome that.
So here's how I deal with that now. I've got this next big idea for surety, and I'm so frustrated myself I didn't see it 3 years ago. But I see it with clarity. But it only happened last Friday, and I've kept my mouth shut about it because I've noticed at times, Cliff, just like you're saying, you are a fellow entrepreneur, because sometimes it's clear in your head, but being able to communicate that in a concise and clear way for your audience and having it fit in their head is a struggle, and it can be so frustrating. And so what I've found is it's best to keep my mouth shut about that, and then I quietly go build the prototype with my designers, and I help folks visualize it. And then if there's a visual aid that can support my position for my next big idea, then I can transcend that frustration and that friction between me trying to take this idea in my head and communicate it. And not only does a prototype help, building the prototype helps clarify my own vision for what the hell we're going to do and how it's going to work. So I build quietly so no one knows what to attack. And that's even as it relates to my own staff. Like, I build quietly and then I go, hey, I got something, come check this out. But by then it's more fleshed out, and it really, I use the prototype just as a translation tool between all these wacky ideas that roll around in my head and how that might express through a product.
Have you ever had one of these ideas that you can see it in Technicolor, and it just, other people just don't see it? Yeah, they don't, like the insurance industry doesn't realize they have a problem, with checks and drafts and so on and so forth. I'm just wondering how you handle that.
I don't know exactly what you mean by Technicolor, Cliff. I try to keep my barbiturates and my work separate, but I feel that if you are going to really claim that you could dent an industry, dent the property insurance ecosystem, like, of course you're going to have that friction, because the powerful people, Cliff, they are already advantaged by the current mechanism for how things work. And so I've found consistently that I'm in this role where I'm going up against really powerful people because they are the ones who really like having 55 direct reports. I can remember selling into a carrier, and I was mountain biking with one of these claims executives who lives here in San Diego. And I was like, hey, I have this solution. I think that we could reduce. I was like, how many people are reporting to you right now? He's like, 55. And I'm like, okay, I think we could get that down to 20 and have the same outcome. He's like, why the hell would I want to do that, Whatley? I was like, well, it'd be more efficient. We can redeploy those 33 people to their highest and best use. And maybe that's outside of claims in a traditional sense and so on. He's like, that's a miserable idea for me. I justify my existence by way of those 55 direct reports. And that idea personified is what I've been up against. And it makes me not love the property insurance ecosystem as much as I'd otherwise be keen to, because I'm up against just nefarious resistance to changing things where it's so self-evident that there's a better way to do it, but the people in power aren't keen to do it because they are profiting from the current inefficiencies in the industry. And said like more concisely, all this industry really needs is carriers collecting premiums and paying against the total underwritten loss value. I need contractors swinging hammers in the field. Everything else in the middle is wasteful. And that waste really cuts into the profit of the restore. That's who really eats it, And I would love to build towards a reality. And I think Actionable and Verisk are doing that with their exact expert tool where, okay, if a carrier has guidelines and those rules are clear, Joe, think about it. They're guideline rules, Joe. Like, it's not that hard to take those rules and then cram that into an expert system or LLM. If we can get to a point, like restorers actually want to build a carrier such that they would get paid without hesitation, right? They just want to get paid fairly.
Sure.
I think we've smoothed this out. And I think that other people in the middle are going to have to get creative to figure out what their role is going to be. But this idea where you're a contractor, restorer, you submit an invoice, and then it goes to a staff adjuster, staff adjuster sends it to some scrubber, maybe like a ward law, and then they beat it up, but then they approve it, and then it gets back to the staff adjuster, and the staff adjuster asks for some change. It goes back to the restorer, and the restorer changes that, and then it goes back to the staff adjuster. Because this is nonsense. Your average claim right now has changed more than 5% according to RCV replacement cost value, 3.7 times on average. Do you understand how expensive that is? Like that somebody has to open that claim up, change the dollar amount that much, 3.7 times on average? That's nuts. And so I'm so proud of the case studies that are rolling out of Actionable where we've got situations where ATI Restoration and USA have reduced the back and forth by essentially half. So now those claims are getting opened back up 1.7 times, right? As opposed to 3.7. That's work to be proud of. And that's what gets me out of bed in the morning. That is flipping exciting stuff. I think at its essence, Actionable is trying to create space to fall in love with our jobs again, because it was way more fun 15 years ago than it is today. This we-they dichotomy bullshit, it is not helping anybody. And at the end of the day, we have to remember we're all policyholders. Any of our behavior should be, and the products we build should be done with an eye towards creating a better outcome for the policyholder. And so many have lost sight of that. And I'm so glad to be part of a movement towards breaking down the we-they dichotomy with an eye towards creating better outcomes for policyholders, of which we all are.
Let's go to the roundup. Grayson? All right, we've got the restoration industry global watchdog, Pete Consigli. Pete, open.
Well, it's funny listening to some of the stuff Whatley was talking about, particularly that last thing, Whatley, about we're all policyholders. When in the 90s, I did a lot of these insurance adjuster CEC programs, hosted by the different contractors. And that was a message that I used to tell the adjusters. I said, at the end of the day, we're actually all policyholders, the contractors, the adjusters. And we should look at working claims, adjusting claims the way we would want it to be done, in our own homes, or
right,
better yet, in our grandma's home, because, who wants to abuse a grandma, right?
Right.
And anyway, so it's good to hear that message kind of coming back after a couple of decades. This thing with the mortgage companies, I didn't realize that you were as involved with that. So I don't know, were you at the REA convention in Myrtle Beach in 2012?
The Dirty Myrtle? Yeah, I was down there.
Yeah.
The
so that, if you remember, there was a panel there that Patty Harmon facilitated that had Ron Kronthal, who was one of the corporate attorneys for Rollin, and then Harvey Cohn was there. And then Patty had a restorer. I remember she taped some video and the guy called in. anyway, I captured the proceedings of that. It was a 3-page document that was dealing with mortgage companies. Most of it was what Roland did and Kronthal presented. And it was posted to the RIA website. But for many years, we used that in a lot of the RIA training programs. And I just, we distributed the paper and he did it. And I felt that those guys actually had the process down to deal with mortgage companies. But it was a very cumbersome process, like you talked about, with all the names and who gets the check and all that. And the funny thing is, not so funny, but during those times, a lot of the classes and the people I did, it was amazing how many companies were almost put out of business because they got pretty well worked over by the big banks and the mortgage companies. I told Ed Cross that that should be one of his books. I know in one of his books, he has a section on mortgage companies, but I think we need to do, it's not going to be a whole big book like the AOBs and all, but some kind of a pamphlet or some document that should be distributed to the industries on that. Maybe that's something you can collaborate with Ed on. I mean, you're both SoCal guys, and put something out there real about how the restoration industry deal with mortgage companies. Just an idea. But
I'm imagining a world, Pete, where mortgage lenders aren't participating in the flow of funds at all.
Yeah,
Surety has proven this is a more elegant way to do it. We will not capture the entire market. Don't get me wrong. I'm not that optimistic. But ultimately, naming a mortgage lender on a paper claim check, guys, even sending out a paper claim check is nonsense. Think about USAA. Joe, we're selling into them. They send a paper claim check and it's got spouse on it, right? Husband and wife, typically, right? Spouse is deployed. They're on a submarine, for God's sakes. You send them a check and it's got Cindy Wick on it and James Wick on it. Those checks, like USAA is having to cancel and reissue some 30% of their payments because the other policyholder is not even in town to sign the damn thing. How much more elegant is Surety's technology in that we figured out digital endorsements of checks? You get an email, your Cindy says, hey, USAA has payment. I endorse it. And then it instantly goes over to James Wick, right? And he instantly endorses it, and you can do that on a submarine. Pete, the future is no damn lenders participating in flow of funds.
Yeah.
I swear to God,
I like that part.
This is where I'm trying to take this damn thing, and I enlist your support.
Yeah, you went about the futurists because I agree with that. I mean, I guess from my perspective, I actually think that if I look at you and Cliff, I think more so than you guys being self-described as entrepreneurs, I think you're visionaries. And not all entrepreneurs are visionaries. A lot of them are. I think that's a good combination. I also believe that where I'm coming from is I think we need to build a bridge to eventually one day where there are no mortgage companies involved. And in the meantime, there's a lot of guys out there who need some help on at least to manage the process. And maybe there could be little fine print, and one day there'll be no mortgage companies involved, Yeah. So the other thing is, Cliff, one of the things I think that you should put in the blog, put all the links in there, a link in there to these AGA events that RIA is hosting around the country. While I was listening to the show, on my phone popped up the most recent email that went out for the one that's going to be in New Hampshire on the 26th of September. And then the Insuricom, I think, is hosting that. Pretty good looking program. And then in October, Pure Clean's hosting one in Fort Lauderdale. And then February 26th, Jeff and the ATI boys are hosting one on the West Coast. I'm sure Whatley will be at that one for sure. Maybe he'll be at the other ones. But this is how the people can get involved, is through going to these AGA meetings, listening to the speakers, meeting other restorers, giving ideas, catching ideas. This is what the whole advocacy movement is about under the REA umbrella. And a lot of the work that Whatley and others are doing, it's kind of at arm's length behind the scenes. And anyway, I think it's all good. One of the best things I really liked, I liked that one interview that you had. I can't remember what convention a few years back with Mike Fulton. You asked him pretty hard questions. And then, of course, all of a sudden, then he's not working for those boys anymore. Now he flipped to the other side. So
that didn't have anything to do with me.
Yeah, it didn't have anything to do with you. But anyway, hey, I don't think Cliff asked early on in this, how did you come up with the thing, the Hey Whatley thing? I kind of get a kick out of that.
Oh, well, coming out of high school sports, right? I went by Whatley, which is customary, and I think it was solidified. My undergrad and my fraternity, there was 3 other Marks in my pledge class, and it became kind of silly. So went by Whatley straight away. And then when applied to this industry, Pete, it's a lot to ask people to just call you by one name and your last name. It's a big ask. It's weird. It's a little awkward. But if you're going to be on a podcast like this and mean it when you say you're attempting to dent the property insurance ecosystem and be remembered and leave a legacy, like you got to be willing to take those risks and put yourself out there in a way that cuts through the clutter. And that's just an expression of it. I may not have earned the ability, Pete, to ask you to call me Whatley, but I'm striving for it. And it keeps me going.
Well, the part that I get a kick out of is the hey. All right, the hey Whatley.
So that came out of like Instagram, Facebook. You need what's called a handle, right? And so you can't call yourself Whatley because that's already taken. So I was like, well, how do people refer to me? They can say, hey, Whatley. And I go, okay.
Yeah. So I don't know whether you're aware of this or not, but you now have created a handle that's analogous to the greatest baseball player of all time. And, he recently passed.
Say, hey, kid.
To say, hey, kid. And that's how Willie Mays in the 50s got, he was just this phenom. And other players, he'd be out there and they'd say, hey, kid. That's how I did it. So I don't think, I'm not sure that you ever thought of that, but being compared to Willie Mays, I don't know there, Whatley. You're a phenom now in these new spaces that you create.
I'm not going to fight it, but those are big shoes to fill, buddy. But I'm definitely not done yet. I might be just getting started. Like I've got another 2 decades of really being able to ramp up and have the leverage to do some of the things that I've romanticized doing. Joe, there's several other in the hopper, right, that are just waiting for me to get Surety on more stable footing and so on. But I'm hugely flattered by your Willie Mays comparison, but I've got a long way to go to do that. But I also have 20 more years as I see it, and I'm committed to it.
Well, listen, I appreciate you coming on the show and and being just so forthright and honest about a lot of stuff. And Joe, maybe we're starting here a Hey Whatley narrative and storyline. So there'll be some follow-up shows on whatever the next new thing is going to be, because I think that the boys really have prided themselves in that. And a lot of shows that I've helped put together have been show narratives, like the one that we did with the Moors, the ATI story, and we've done a lot like that. And Rusty Amarante's story, etc. And I have a couple others in the hopper here. I don't want to disclose yet, boys, but on my road trip, I'm always recruiting, great industry stories where lessons can be learned from that. So let's stay tuned. Anyway, Whatley, thanks a lot, buddy. And I'll see you when I see you, probably next REA event. I'm not planning on coming to San Diego on this event. And next week I turn around and I head I-80 back to the East Coast. I'll be making a lot of stops along the way, visiting some of the usual suspects, and before I get to the summer camp. And then eventually I get back to Florida just before the peak of the hurricane season, just before Labor Day. But it's been good not to be in Florida for the last 2 weeks because, or the 2 months rather, with all the humidity and rain and all. It's a good time not to be there. I wish I was in San Diego, but I'm not. So anyway, good job, guys.
We always appreciate you joining us. Cliff, do you have any final thoughts or questions?
No, I was just wanted to give Whatley the last word, actually.
Let's do that. Before we go, we always like to give our guests the last word. Anything we missed that you'd like to add, or anything at all that maybe give us a little hint on what's happening in the future?
I'd like to close out on this idea. Often in the absence of information, we arrive at the most nefarious conclusion about the counterparty and their behavior. Joe, this came up with your question about mortgage lenders. And we all instantly go, hey, they're holding onto that money because it's investable, right? And they're trying to profit from it directly. But the truth is they've got Fannie and Freddie to deal with. It's a non-investable asset. It's actually costing them money to distribute those claims proceeds. And I'd ask the audience to reserve that judgment. Don't instantly arrive at the most nefarious conclusion when you get something back from a staff adjuster that puts you at odds. And I'd encourage staff adjusters to not assume the worst. Most restorers are really ethical credible people who are just trying to put some food on the table and take care of policyholders. So give folks the benefit of the doubt, and that will create a rising tide that rises all boats.
All right. Our thanks to this week's guest, Whatley. Hey, Whatley. Looking forward to many more discussions in the future. I also want to thank Pete Consigli, the restoration industry's global watchdog, for joining us on the Roundup. My co-host, the Z-Man, Cliff Zlotnick, Grayson, Gone Fish, and Fisher. Most importantly, our loyal audience and sponsors. Next week, Don Weeks is going to join us. We're going to talk about, we got a list of things to go through with Don. He's got a chapter in the ACGIH bioaerosols book. He's got to talk about the AIHA ASHRAE MOU. He's also just coming back from Indoor Air 2024. We'll be getting a little review of what happened there. So join us next week at noon for the next edition of IAQ Radio Plus.
Keep building.
IAQ Radio, I'm Spike Reel saying thanks for listening.